Welcome back to Live Lunch and Learn. I'm Lambros Demos, your host, and the July stats are out for the Toronto Real Estate Board. So we're going to touch on that a little bit. I have a special guest with me today, as always, a friend of the show, Keisha Johnson. She'll be on in a second. Before I bring Keisha on, I just want to remind whoever's watching this, or maybe on the replay later, if you're watching, feel free to participate. Don't be shy, say hi, post your question in the comments, or if you want to join us as well, we may be able to get you on as well if you want to ask your question live. So without further ado, let's bring in Keisha. Hey, Keisha, how are you?
Hey, good morning. How are you doing? It's Friday.
Yeah, it's still morning. Got 9 minutes left in the morning.
Mhm.
So yes, it is Friday, TGIF. Awesome. How was your week been?
Actually, it hasn't been too bad.
Yeah.
It's been a great week. Very busy, I have to say,
Okay.
but a good week nonetheless.
Okay, awesome. So let's jump right into it. Okay, so we're seeing all over the media that the July stats are down, sales are
Mhm.
down, etc. But there's a little more to it than that, obviously.
Break it
As I
down.
touched on, break it down, absolutely. Because we tend to have short memories, and the media
Mhm.
especially has short memories. A year ago, let's jump back a year ago to July 2020. We're
Mhm.
just we were about 3 months into the pandemic, 3 or 4 months into the pandemic. The market shut down pretty much from mid-March to mid-May, and then things started picking up.
Yeah.
Like nobody knew what to expect. Everybody thought, oh, this is going to be a write-off year for real estate. Nobody's going to
Mhm.
buy. Nobody wants to sell. Nobody wants to buy.
The
But
prices
the
will plummet.
opposite. Exactly. Prices are going to come down. CMHC actually predicted a huge price drop, which we'll touch on later. So remind me
Mhm.
to bring up CMHC for that.
Yeah.
But the opposite happened, right? So not only did the market pick up again, it came back with a vengeance, right?
Mhm.
June was almost back to normal.
Yes.
And then July just took off. It
Mhm.
was the best July on record ever. We had the most sales in July forever. And then this is during a pandemic year. And summer's traditionally slow. So nobody knew what was going on, and this trend continued. August was the best August ever, September, etc., just all the way in. So we're comparing July 2021 to July 2020, which again was the best ever. So when you compare something to the best ever, obviously there's going to be a bit of a drop. But having said that, we're still above average. For the month of
Mhm.
July, sales for the month of July are still above average. So there's no reason to think that everything's going to come crashing down or anything like that. So just to put things in perspective, and that's why I bring that up, right?
Yes.
Just to put things in perspective. So anyway, 1 second here. I'm having some issues on LinkedIn I'm not sure why. Sorry. All
That's
right.
okay. We're
Yeah.
live. It's fine.
So what are you seeing on your end? Are you busy in July, or were you busy in July? Are
Yes,
you busy
and
right
I
now?
mean, for my flow, it doesn't just consist, of course, of home purchasers, but also refinancers as well.
Okay.
As we know, interest rates are still historically low, so
Okay.
a lot of individuals are tapping into that, right? Whether it be they're taking out funds to pay out some debt, consolidating their funds. We know that credit card rates can be quite high, and if you're
Mhm.
able to consolidate that, into your mortgage, where you're, moving from a 19% to 2%, a 1.9%. Obviously, that's brilliant. Or they're taking out to renovate, and of course to reinvest as well. Into a second property. So it has been quite busy, and it's been very rewarding. Of course, So definitely, we have to just keep the flow going and assisting our clients. Yeah.
Yeah, 100%. And I'm glad you mentioned that, you brought up that point about reinvesting into a second property,
Hmm.
because now is probably the best time to do that, right? We've
Yeah.
seen a surge in home values, right?
Hmm.
They've just gone up tremendously. So
Yep.
all of a sudden, people have found themselves with a ton of equity in their homes, right? And the most of them, or some of them, have already tapped into that equity to buy a
Hmm.
second property or maybe a third property, or what have you, right? And I think that's a very smart thing. And now is the best time to do that, because August is traditionally the best time to buy a home in real estate in the Greater Toronto area, for a number of reasons, right? I mean, people are away on vacation, right? And so there's not that much supply. Yes, I'll give you that, but there's also less competition. So whoever wanted to buy a house for September, get their kids in school, et cetera, has already done that. They've bought in May, they've bought in June. We had the biggest peak in March.
Yeah.
They even bought in July, because now that gives them a month or two to close
Hmm.
before they put their kids in school and settle in, and then they take August off to go on vacation. Uh,
Right.
add to that, we're just coming out of COVID restrictions, right? I mean, it's
Hmm.
not entirely back to normal yet, but tons of restrictions are lifted. People are comfortable going out again. They're comfortable going on vacation again. So add to that, that's less activity even more. So whatever inventory is out there right now, it's a golden opportunity for any home buyers or maybe investment buyers to jump in there and take advantage of
Take
that.
advantage. Yeah.
Take advantage of that. Yes, 100%. Do you agree with all that?
Yeah, 100%. I
Yeah.
mean, when we look at, I have some stats here with Ontario. In June, actually, home prices went up 26%. That's huge.
Yeah.
I have clients that I've put into properties, let's say from April. Actually, as a matter of fact, they purchased the property. By the time they move in, the home is the
Wow.
home has already gained
Yeah.
some equity. There's a few in right now that are getting ready to refinance. There's been a year on the property, and it has grown tremendously in terms of equity. So this market is really, really, really taken off. What's your thoughts with regards to, individuals, believing that it's going to scale back? Let's wait a little bit, because we think things are going to get back to our price range. What's your thoughts with that?
Yeah, I think that's a very dangerous waiting game, because over the past 40 years, real estate prices have consistently gone up. And even in the last year, they've just skyrocketed. And even before this year, I mean, every year people are saying, well, they can't go any higher. They can't go any higher. They've got to come down. They've got to come down. And every year they keep going up and up and up and up. I don't know if you're a football fan, if you know Tom Brady, right? I made a
Yes.
post on Instagram the other day that people are saying, oh, the market's finished, or it's going to come crashing down. And then I got a serious picture of Tom Brady, because every time people write off Tom Brady, I'm not a Tom Brady fan, by the way, just full disclosure, but every time they write him off, he comes back and he wins another champ, thrown together, a
Yeah.
ragtag team, and boom, they win the Super Bowl, right? So
Right.
that's the real estate market for you. Every time someone says,
Yes.
"Oh, it's going to crash," boom, it comes back with a vengeance. And I think it's going to continue going up. Maybe not at the pace that it's gone up over the last 6 to 12 months,
Mhm.
but it's going to continue going up. So if you're waiting,
Yeah.
then
Make
you're
decision.
only going to end up paying more.
Yeah.
And if you're waiting to, here's a question for you, and this is a good um, problem that some people have, because maybe they don't have the down payment, right? So maybe they're a first-time home buyer and they're saving and saving and saving, trying to get in there. But the longer they wait to save, the
Hmm.
prices keep going up.
Yes.
So are they always on a treadmill, or are they going backwards, because maybe they can't save at the same rate that the prices are going
That the
up?
prices are going up.
So what
Yes.
would you suggest to somebody in that predicament?
Yeah, I mean, definitely, if there's opportunity for you to come together with someone and pool your resources
Hmm.
together, definitely recommend that. Another way to get into the market, it can be, it can be a little bit costly in terms of on the private sector. I have clients that's gone in on the private side with regards to, they're a little bit more lenient with regards to their guidelines. And now a year in, they're getting ready to refinance, stretch that out to 30-year amortization, which fits them into affordability once they renew. So once again, it might be a little bit more costly. And I do a video on that actually on my Ion Mortgage YouTube channel, kind of breaking down how you can cut that down payment in half. When you are doing it on the private sector, you do have to put 20% down, right? Which we know is quite a bit hefty, but we can cut that in half in terms of 10% down. I do a little bit of a breakdown with regards to how you can do that.
Okay.
But if you can definitely, to team up with a family member, and pool those resources together, because it's about the income, right? And your income, your down payment, come together. So many people do it. Sometimes we're so, I got to do it up by myself. Come together and look at it as a long-term investment. I have clients that has come together, and every time I see that, I say to them, brilliant, because even right now, as they're sitting in that home, it's already, quite significantly gone up in in equity.
For
It's
sure.
mind blowing.
Yeah.
Yeah.
No, I agree with you 100%. Those are some great points. Pooling your resources, or using the private lending route, if you can.
Yeah.
Yes, you're going to pay a little bit more in interest, but I think it's well worth it,
Yeah.
because the interest that you're paying is going to pale in comparison
Oh,
to the
yeah.
home price appreciation. Because look,
Yes.
we've got double digit home price appreciation year over year,
Hmm.
right?
Hmm.
So even if you pay 5 or 6% in interest, that's half of what the market's going up at, right?
Yeah.
So
Yeah.
and like you said, it's only for short term, right? It's only for a year or 6 months or maybe 2 years max, and then by
Exactly.
that time you'll have paid some equity down, you'll have saved up more, and now you can go to more traditional lending route, right?
Exactly. One of my quotes is, "Uncomfortable yourself now so you can be comfortable later."
Beautiful.
Right. So taking those sacrifices. Another thing as well is, don't be so picky, you know, because honestly, you have to, there has to be the toss off. You got to be willing to compromise. What can you live with?
Yeah.
Right. What are
Yeah.
you willing to compromise? Because while you're out there being picky, the prices are going up.
Yeah.
Right? Look
100%.
beyond what you see
Yeah.
right now, potential to do a bit of renovation. Look beyond it.
Absolutely. No, that's a great point as well. I love it. I had just had this conversation the other day with somebody, and asked me, why are all these people wanting to get into a detached $1 million house? Why
Hmm.
not get into a condo? At least you're into the market, right?
Yeah.
Just get your foot into that market, because
Hmm.
get some appreciation going, right?
Yeah.
Instead of having your money sitting in a bank account or somewhere else where you're getting minimal interest. At least it's appreciating with the real estate. So
Exactly.
speaking of condos, my
Hmm.
prediction is
Okay.
that condo prices are the next ones to take off. Like
Mm.
we've seen detached homes take off, and
Hmm.
now we're going to see condos take off, because immigration is opening up again, right?
Yeah.
Over the next 3 years, I think they're going to bring in, what was it, 1.2 million people across Canada. A lot of
Yeah.
those people are going to settle in the GTA, right?
Yes. Yeah.
Obviously,
Hmm.
that's a no-brainer. So, and where are they going to live, right?
Yeah.
So
Yeah.
first,
You gotta rent.
exactly. So newcomers, exactly. We're thinking all the same lines.
Yeah.
Newcomers to the city, to the country, usually rent for the first 3 to 5 years or whatever it
Yes.
is, right? So they're going to be looking for condos to
Hmm.
rent. They're going to be looking for something, somewhere to live. So I think the smart investor is going to, buy up condos, right, and then rent them out, etc. So you're going to see the prices take off there.
Yes.
That's my prediction. Right.
100%, 100%. And also with regards to, we do have some good news with regards to, the insurers. One of our insurers that did a bit of a caught us a little bit off guard with regards to the guideline change. There's a
Oh,
saying that always, when they say that whenever America, I don't know if you've ever heard it, but they say whenever America sneezes, Canada catches a cold.
yes.
And so, kind of the same thing. I like to put that in line with, CMHC and
Okay.
Genworth and Canada Guarantee. So
Yeah.
when CMHC made that bold move of adjusting their guidelines with regards to your credit score has to be at least 680 for them to actually look at your file, amongst other guidelines. They thought that other would follow sync, that Genworth, now Sagen, would follow sync, and that didn't happen. They
Yeah.
are admitting right now that it was a mistake, that
Exactly.
it wasn't a good move, because now they're reversing that, and putting back the original guideline. They've lost a lot of business,
Yeah.
based on that bold, not a wise
Wow. Wow.
move.
Okay.
Yeah.
So just to clarify for people watching,
Yes.
they may not be as familiar with CMHC or the other two. CMHC is Canada's Mortgage and Housing Corporation, right? It's a
Mhm.
government-owned institution,
Right.
organization. It's a great resource for housing, right?
Yes.
So, but the main thing that they do is they provide insurance for
Insurance.
mortgages, right? So if you're
Yeah.
putting less than 20% down, you're going to be paying something called a mortgage insurance.
Hmm.
Now, correct me if I'm wrong, that even if it's over 20%, the bank is paying the mortgage insurance and they're not going to trickle it down to the consumer, right? So
Right. Yeah.
that's my understanding. But
Hmm.
regardless, less than 20% down, it's going to come out of your pocket, and boom, you're going to have to pay for mortgage insurance a little bit extra.
Yep.
So, and CMHE is a leader, or at least was a leader. I
Was
think
the
they
leader.
still have
Yes.
the biggest market share, but like you
Yeah.
said, they lost market share
Yeah.
because they went out of their way to change the rules last
Mhm.
year,
Based
increase
on
the credit
COVID. Yeah.
based on COVID, right? Because they
Yeah.
thought they predicted that it's going to come down, crashing down 9 to 18%. And
Mm-hmm.
it went the other way, as I mentioned a few minutes ago.
Mm-hmm.
They also changed the credit score, like you said, from 600 to 680 qualifying
Yeah.
credit score. I believe they changed the total debt service as well. They brought
Yes.
that down, so now you have less money to spend for
Mm-hmm.
housing, etc. So they made all these changes, thinking that because there's two other options, right? As you mentioned, there's Canada Guarantee and there's
Yes.
Sagan, which used to be
Mm-hmm.
called Genworth. Now there's Sagan, right?
Yeah.
So they thought this reminds me of um, Will Ferrell in the movie Old School. Have you seen
Mm-hmm.
that?
No, I haven't seen it.
He says, "We're going streaking," right? So he
Oh,
starts running down the street,
yeah.
right? And he's by himself, right? He's running there. Nobody's following him. So that's CMHC. They went streaking,
Where
and
are you
nobody's
guys?
following them. Everybody's back
Yeah.
at the party. They're
Right.
saying, "What's
We're
going
not
on
part of this. Yeah.
here? We're just gonna go with the other guys."
Yeah.
You know,
Good
and
comparison. Yeah.
yeah, exactly. And Canada Guarantee. So now he can't. Students has finally come back. They realized their mistake. They got pulled over, and they said, "You know what? Oh, sorry. Forget all that. Just
Yeah.
erase that last 12 months," and they reverted back to what it was before, right?
So
I
it
think
was
back
before.
to 600, back to the TDS, and all that
Mhm.
stuff. Right? So,
Yeah.
yeah.
I wanted to very quickly point out as well before we kind of wrap up with
Okay.
regards to interest rates.
Okay.
Um, you know, interest rates are historically low.
Okay.
But one thing I want for people to really understand is that, you know, there are a few moving parts, right, with
Okay.
regards to how you can have access to the best rates. And so, there are a lot of rates out there, but not completely sure if you qualify for those rates. So when we're looking at, let's say, self-employment,
Okay.
right, the rates are going to be a little bit higher because of self-employment,
Yeah.
unfortunately,
Yeah,
right?
I know that well.
Yeah. Yeah.
For
Yeah.
sure. Yeah. Yeah.
Yeah. When we're looking at not the best credit, of course, we should know that. That's
Yeah.
for the most part, yeah, there's a rate compromise based on that,
Okay.
right? If we're looking at if you have more than 20% down, right, it's
Mhm.
not insured. So this
Yeah.
means to the bank, their money is not sure. And
Right.
so if you're a first-time home buyer, you're putting down 5%, it's insured. The
Yeah.
bank will give you, the best stellar rates all day,
Yeah.
right?
That's right.
But once we are over that 20%, that's when
Yeah.
the rates get a little bit higher.
But that's exactly why, as I mentioned a minute ago, it's because
Yeah.
the bank still has to pay for that mortgage insurance. So they're not like outward saying, okay, you're paying for the mortgage insurance. They're kind of rolling it into the interest rates. That's why they're charging you a higher interest rate, right? I mean,
Exactly.
that's probably what they're doing. Yeah.
Right.
So
Exactly.
in actuality, you are paying for it. It's always coming out of your pocket.
It's always
It's all,
coming.
the
Yeah.
consumer is always going to pay for everything.
Exactly. Yeah. So I mean, I've had so many times where I have a client and they'll say, oh, but my brother, my whatever just got this. Do you know the whole scenario, right?
Yeah.
What does what type of mortgage are they getting into? What's their particular situation, right? So you got to look at the bigger picture,
Yeah.
because once again, the best rates are out there right now, yes,
Okay.
but each individual file is different depending
Okay.
on what your current situation is. Yeah.
Okay, cool. So on that note, if somebody wants to get pre-approved or talk about interest rates with you, the best way to contact you would be?
Yeah, for sure. So you can contact me, KJ at RTS Mortgage Financial. You'll see my email address down there. You can
Okay.
also follow me on Facebook. That's
Perfect.
RTS Mortgage Financial. Also Instagram, RTS Mortgage Financial. And I do have my YouTube channel as well. That's
Nice.
I Mortgage, where I try to break down some information. In addition to that, I do mortgage seminars as well, where I break it down. I like my process to be very educational. So I
Okay.
do break down from amortization to variable rate to how to calculate your own down payment. So you're empowered, so when you are ready, you're truly ready. A lot of times we think that we're ready, and then that's when we start to approach a mortgage broker, and we find out, oh, wow, I need to take a little bit of a step back. So we need to position ourselves. And in those seminars, I help you to position yourself so that you can get on that pathway to home ownership.
Great point. Great point. Yeah, I always tell my buyers that the first step is to contact a mortgage broker. That's step number one. I won't even even send them any listings unless
Yeah,
they speak to a mortgage
definitely not.
broker, right? Yeah, great. Okay, thanks very much, Keisha. That was awesome.
Yes.
You have a good weekend, and everybody watching live or on the replay, have a great weekend,
Yes. Have a
and
great weekend.
see you next time.
Yes.
Ciao.